Concept of financial independence, retire early, also known as the FIRE or FIRE movement, is much more known and appreciated now than it was 10 to 15 years ago. This is probably because we hear about it every day on social media and other channels. So much that everyone is now interested in this concept and what it entails. If you're watching this video right now, you might feel like this concept is an unrealistic dream for you, since you probably don't earn as much as you'd like. However, financial freedom isn't just dependent on your income or salary margin. What does FIRE actually mean? More specifically, what does it mean for your own personal life? Now let's get right into it. Stage 1. Financial dependence. Most experts refer to this stage as Stage 0. A financially dependent person is, without mincing words, also called a baggage. Being financially dependent means you depend on a third party for survival and taking care of day-to-day expenses. It means you probably have a negative net worth. Your assets are less than your liabilities. On the flip side, however, financial dependency isn't always bad. As I'm not here to criticize anyone, you could be in debt because you're taking loans for your studies to get more money in future. That's what's called good debt. You might owe some debt, but keep up with the payments, which is also a good thing as you have negative assets but positive cash flow. Even at that, you're probably still dependent on third parties like family members, friends, or even banks at this stage. The first stage of financial freedom entails stable income and especially building up savings and emergency funds from this income. You need to have a working plan of life first. Work hard and set aside a specific amount of your money for savings, maybe 10 to 15%. Stick to that amount no matter what. If you can do this, then you're well on your way towards financial independence. Stage 2. Financial solvency. This stage is sometimes called the survival stage. You get to this stage when you're able to meet all your financial commitments, pay your bills, and not depend on someone or something to help you cover your expenses. Now obviously you may still have outstanding loans, but you're not adding anything new, and more importantly, you can make your payments when they're due. If you're reading this as a student, the way to reach this stage would be to get a job that earns you just about enough, so you don't depend on your parents for the basics. If you already have an income stream, the route to go is getting a better paying job, adding more income streams, or cutting down on your expenses. Stage 3. Financial stability. What this stage majorly entails is that you set aside emergency funds for rainy days. You can start to save after you are able to consistently meet up with your financial responsibilities, pay off debts, and are able to reduce your daily expenses. This additional income can act as your financial reserve to which you can resort to when a sudden major expense may arise. At this point, having certain debts is typical and not completely bad. You may still be paying your school loan or mortgage each month, but you've paid off the majority of your credit card debt and there's no need to incur further debt. Stage 4. Debt freedom. As the name suggests, this stage entails you paying off all your debts. This seems too much, however, since most people have a mortgage debt of more than 20 years, meaning they would technically be in debt for the next 2 decades. Hence, we consider this stage to be achieved when you pay off all your high-interest debts, with exception to mortgages. Freedom from debt is necessary because debt is money unpaid for your past spending. The more debt you have, the more you will be spending on paying off your previous expenses, leaving you with less money for your expenses now and in the future. Stage 5. Accumulate 1 year's worth of annual expenses. At this stage, you must have already gotten rid of high-interest debts, leaving you with only a low-interest mortgage. In fact, now it's time to accumulate wealth. The first point you must reach in wealth accumulation is saving an entire year of expenses. Imagine your total expenses last year was $10,000. This year would require you to set aside the same amount. Once you do this, you'd have a higher degree of freedom, supposing you wish to leave your job and focus on something else, as you'd be alright with your savings for a whole year. Stage 6. Accumulate 5 years' worth of annual expenses. This stage is in a similar mold at Stage 5, but instead of saving a year's worth of expenses, you save 5 years. As with our previous 10,000 instance, saving 5 years' worth of expenses would mean you've accumulated $50,000 for yourself. Sounds good, huh? When you achieve this stage, you might be able to take 2 years off your job and work on other projects as you have a little financial breather to rely on. Stage 2. Financial security. If you follow the process of Stage 5 and 6, then you're ready for financial security. This stage is all about the value a good investment can offer. This stage is where you not only save but put your saved up funds in calculated and diversified investment portfolios that can deliver short, medium, and long-term returns. If your investment income can cover your basic major living expenses such as housing, food, utilities, and transportation, then you're at the stage of financial security. Financial security is not an excuse to quit your job. The idea behind it is that the income from your investments can match up to your living expenses monthly budget. This doesn't cover expenses such as minor luxury and miscellaneous expenses that pop up. That's why you still need your job at this stage. Stage 8. Financial independence. Financial independence isn't too different from financial security. The major difference is that in financial independence, you account for your major living expenses and every miscellaneous expense that might rise as time goes on. If your income stream and accumulated wealth is able to cover these expenses, then you can truly say you've gained financial independence. Stage 9. Financial freedom. Once you're past the stage of financial security, it's a fairy tale world from there. Financial freedom is the stage when you can comfortably afford one or two extravagant expenses, in addition to the annual expenses you could previously afford. When you reach financial freedom, you can allow certain things you denied yourself and your family. You could buy a nice car for your partner, maybe go on a holiday trip once in a while. Then you're well and truly out of the woods. The difference between financial freedom and the previous stage is that these extravagant expenses were previously not considered. Stage 10. Financial abundance. This is essentially the pinnacle of financial independence. In this stage, you have enough to sustain your lifestyle and have much more than you used to use for anything else. You have surplus from your passive income stream that you can comfortably donate to charity, start a new business, invest in relatively risky businesses, and do whatever else you want. At this stage, you not only have to engage in smart money management, but also smart asset management. At this point, you need to ask yourself questions like, how do you control your passive assets? How do you allocate the income that comes from your different investments? Who should benefit from these assets and investments at a later time? Would they be divided or distributed to your family and loved ones? Anyways, the point is that at this stage, it means you're able to sustain your chosen lifestyle, even when you consider possible inflation and recession. Financial independence isn't limited to a single definition or description. It's basically a stage you get to when you have enough money to live a comfortable life. You could earn a lot and save so little or have little assets. At the same time, you must earn relatively little but have savings stocked up for rainy days. There's no quick means to financial freedom unless you win the lottery. Even when you do, you'll still need plans to double and even triple your money while working towards financial independence. Essentially, you need years of constant work before achieving this goal called financial freedom. Most people see financial independence as an ultimate goal and tend to forget all the processes that led to it. Following these steps little by little would definitely give you a hand from financial dependence to financial abundance, or security at the very least. If you found this helpful, please give this video a thumbs up so it can be spread to more people.